Hey YouTube, this is Zach with Achilles Financial, and today I want to talk about what my plan is going forward, what I'm looking for out of my 2021 investing strategy, and what are some of the pros and cons going forward, depending on what we expect to see over the course of the next year or 12 months. So, really, what I'm looking at doing over the course of this next year, in particular with the portfolio I have here on the screen, is selling covered calls. And this is something that we've been doing. We've talked about on this channel probably 8 or 9 different videos at this point in time. And I want to show you just some of the success that you can have using this strategy. So what I have here on the screen is a example of a very high volatility EV stock in the form of Electromechanica VEHS Corp Com, or more commonly known as Solo by their ticker symbol. So this is a company that had a huge run up when they were looking at the EV stocks in particular, and they had a lot of the sympathy play coming from the XPEV, coming from the NEO, from the Li Auto. So when those companies saw this huge run up, Solo was one of them. So what I did is I purchased 100 shares. As you can see, I traded those at $7.16. So that cost associated with it was $716. However, this is a company that what I have continuously been doing is selling these covered calls. As you can see, I sold the covered call for January 15th, saying the stock would be under $8 a share. Otherwise, I would have to sell my shares. And as you can see, I have now, or rather I was paid $85. And right now that same contract is worth $37.50 if I wanted to buy it back. So this was an initial investment of $716. And if we took that 85 and just simply took that as a total percentage, then right away I am walking away with a 12% gain. However, the strategy that I'm looking to utilize here is find these high volatility stocks, sell the out of the money call, and then just keep doing that until they sell. So at this point in time, if I were to do a similar strategy over the course of the year, then I would double my portfolio. Where am I getting that number from? I'm simply taking this 85 and multiplying it by 12. That would be $1,020. So why do I want to do that? Why do I want to use this strategy? That's not really long-term investing. Well, the short answer is I'm simply taking those profits at $85, and I will be using that to purchase shares of these 3 stocks here on the left-hand side of my screen. As you can see right now, I have Nvidia, CRM, which is Salesforce, and Netease, which is NTES. So all 3 of these are software. All 3 of these are very well-established companies that have a lot of growth potential. I've done a video on each one of these. I won't be buying Netease at the current price, although we'll see what happens going forward. But this is one that we got in at $88, and I'm just going to sit there and let it ride. But these are 3 companies that I think are just going to be market dominant, and I am going to continue to hold them. So how do I purchase these shares using this strategy? As you can see, this account currently has right at $400 a share. I am going to continue to hold that $400 and then make a decision on which of these stocks that I want to purchase. Maybe I will purchase 3 or 4 Netease, or maybe 2 CRM, or just hopefully wait for the next covered call. And pending the price of Nvidia, I will purchase another share of Nvidia. But the goal for this strategy is really to emphasize a consistent approach. As you can see, this is something that we did with our Aqua Bounty shares some time ago. But as you can see, we've got these various pricing capabilities here where I can walk away with a total potential profit of $168. So that would free up all of this cash flow, but that extra $168 of profit would then just go straight into this cash right here, so I can just continue to purchase additional shares. So this type of strategy isn't always flashy and exciting, and the reason behind that is because oftentimes people are looking for that quick flip. However, using this strategy, it's a very safe investment, and we're looking for that compound growth. So what we're not going to see right here is on average that 7% annual that you would normally see from a mutual fund, from an index fund, but rather what we're going to see is some of these high caliber, much larger gains. So even if we wanted to just look at a covered call through January of next year, you still have the capability to kind of make those same trades, and it trades at a very high premium where someone will actually pay you up to $245, which from the current share price is nearly 50% of the value to hold your shares for just 1 year, and that's still having the stock move $3.50. So as you can see, just when we make this a covered stock play, where we have it at January 21st of next year at $10, your maximum profit is $586, and your maximum loss would be $414 as the dollar, or as the shares are going over the course of the year. This is a very safe play, aside from the fact that the stock could go to zero. But again, it's not a very flashy approach, but this is one that you can consistently get 10%, 15% on a month-to-month basis if you're picking the right stocks. So this is what I'm going to be looking at. This is a strategy I'm going to pursue. If you are looking to see the results of that strategy, you can find them right here on the channel. And if you want to know when I'm buying, selling, or making these trades, join the Discord. I let everyone know my trades there. So appreciate you watching this video. I hope everyone has a wonderful New Year's. And the market will be closed tomorrow, which is going to be New Year's Eve, on a early basis. I believe it's going to be like 12:30 or 1 o'clock Eastern time. So let me know in the comments below if you have any questions, and if you have any plays, drop them there as well. If you find this content helpful, please leave a like and subscribe. Thanks everyone. Talk to you later. Bye.